Hi, everyone. Thank you so much for joining us today for this important discussion on year-end preparations in order to lead to success in the new year for your sustainability reports and related calculations. Before jumping in, we'd love to give you a little bit of background about who we are. 3R Sustainability is a full-service sustainability consulting firm that works with a variety of clients from various industries on many services, sustainability management systems, climate-related work, and greenhouse gas emissions reporting. Climate risk work aligned with the California regulations, as well as EPR regulation alignment, energy services, and assurance services. So I know that's a handful. We got a lot going on at 3R. We also host many webinars throughout the year. If you'd like to stay in the loop on that, you can join our mailing list or follow us on LinkedIn. I think this is the last one for the year, but stay tuned for 2026 webinars. All right, let's get into it. I wanted to introduce today's panelists. We have Rachel Buckowitz, who oversees 3R's sustainability reporting services, including our sustainability reports written in accordance with GRI, the Global Reporting Initiative, SASB, and IFRS S1 and 2, along with many other related standards. We also have Megan Tarrant, a consultant on the climate and greenhouse gas team. Megan has experience with greenhouse gas inventories, climate-related reporting standards and frameworks, including CDP and climate risk assessments aligned to California's latest climate laws. All right, with that, I'll hand it to you, Megan.
Thanks, Preston. So welcome, everyone. We know that the year end can bring all kinds of work onto your plate, like finalizing budgets, setting targets, and other forward-looking planning, whether it be current, if you follow the calendar year, or if you have a different fiscal year at a different point. But the point remains the same. Year end can be difficult. So while it could feel daunting to take on more tasks that relate to sustainability in this year end period, we feel it can really help set you up for success when Q1 rolls around in a few months, and you'll be glad you did. Today, we'll talk about a few key parts of a sustainability program, specifically greenhouse gas inventories, sustainability reporting, and assurance, and how getting a jump start on each will enable data consistency and efficiency, optimize resources, provide strategic insights, and create competitive advantage. Strategic planning will help you set realistic timelines to meet deadlines and align planning with budget cycles. Streamlining the process will save time and effort, and engaging with stakeholders early helps set expectations and establish trust. And establishing these solutions for potential bottlenecks helps to avoid any resource constraints. All of this work being started now can help make a big impact in Q1 and beyond. So let's dive in. How to prepare. So we're going to start with greenhouse gas inventories. Some of the slide animations are not working, but I will talk you through it, and the recording will be shared out. But one step you can take to prepare for a strong first quarter is to get started on your greenhouse gas emissions inventory. Greenhouse gas inventories measure the amount of greenhouse gases released by a company over the course of a year through direct and indirect emissions from internal operations and indirect emissions from upstream and downstream of the supply or value chain. So that's just kind of the definition of what a greenhouse gas inventory is to set the stage. It's crucial to, the first thing to do when working towards your inventory is to understand, there we go, thank you, Preston. So again, the definition I just read is kind of at the top. These inventories help identify key areas for emission reductions to enhance sustainability reporting and to optimize operational and supply chain management. So our top 3 recommendations for how to prepare for a strong Q1 related to a greenhouse gas inventory. The first thing to do is to understand what your inventory is going to be used for. So there are different deadlines associated with CDP, SBTI, California SB 253, all of the acronyms in the world. You also could have customer or supplier requests with their own deadlines. Or you could be publishing your own sustainability report and need to get the team the emissions data by that time. There are different deadlines, and they all have different drivers that are important to be aware of as you set out on this journey. And the work that you start doing now can help you meet each and every one of them. Calculating your inventory can feel like a lot, whether you're using internal tools, external technologies, or a partner like 3R. Our top recommendation is to get started early on to make things lighter are to conduct a data mapping exercise and prepare collecting the data where possible. Data mapping should be looking at applicability, ownership, and precision of the data that will be used to calculate the emissions. And then you can begin collecting that data from whatever sources were identified. We wanted to demonstrate what a data mapping exercise looks like for 3R. These are the steps we would follow with a client to help them prepare to calculate their inventory. So first, to determine the applicability, each emission source from scope 1, 2, and 3. This could include natural gas or other fuels for heating, fuel for vehicles or equipment, electricity for power, steam, and others from scope 1 and 2, as well as the 15 categories of scope 3. Once the applicable activities have been identified, determining the ownership level for each source is crucial to understand what level that data comes from. This could be from facilities, or it could be from the overall corporate level, or maybe you have subsidiaries or operating companies that are kind of in between those two buckets, and that's who the data is going to come from. So understanding where it comes from helps you then decide what level of precision you have. There are different levels of data precision based on the data source. Once you've determined what kind of data is available, you can decide what calculation method could be used. Different methods of calculation have pros and cons. The more accurate the methodology is, the more difficult that data will be to obtain. So the easier to obtain data will require more estimates and assumptions. Another part of determining the data precision is to identify where the data should be collected from internally, not just what level it comes from, but it could come from a team or a system. So for instance, if using vendor procurement data, you need to engage with the procurement or finance team. And once you know what kind of data you need and where to get it, you'll start collecting it. This is the work that you can start ahead of time for certain things like utility bills or other monthly data that you can collect up to maybe October or the 10th month in your fiscal year. For any annual data, such as financial data, it's probably better to wait until you have the full 12 months before requesting it from internal stakeholders, just to reduce the duplication of work there. And as the data is collected, you'll want to note any gaps in the data, such as a missing month of utility bills, or just unavailable data in general for certain applicable scopes. As the data is collected, you'll need to keep track of any outstanding or missing pieces, because you'll need to use estimates or assumptions to fill them. So these estimates and assumptions all need to be sourced from reasonably acceptable sources and tracked in order to have this complete inventory at the end. So these are the steps 3R would go through and recommend you starting now in order to have a more successful inventory for the upcoming year. And now I'll pass it over to Rachel to talk about sustainability report prep.
Thanks, Megan, and thanks for walking through those steps for greenhouse gas inventories. Similar for sustainability reporting, there's plenty that you can do now to set yourself up for a smooth reporting cycle. On today's call, we're going to focus on three early steps that you can take. The first being determining the use cases for the report, and then confirming report details and making a plan, and really putting that plan in place and making sure that all those who will be involved are aware of what their involvement will require and when. You can go to the next slide, Preston. Thanks. So starting out with report use cases, while this may seem obvious, there's so many potential use cases and potential audiences for reporting. And so it's a great place to start to just lay the foundation of what the expectations are going to be for your sustainability report. So this is a non-exhaustive list on the slide here, but just some examples of how sustainability reports can be used. First, using them to meet stakeholder requests or requirements. So this could include your customers, investors, employees, or business partners if they have different information that they are looking for. And importantly here too, not only making a list to consolidate what are all of these requests or requirements that you're getting from different stakeholder groups, but then furthermore, what is the plan to communicate the response back to those stakeholders? Reports are also very useful for providing evidence on different sustainability assessments and benchmarks. A common one that we see with our clients is EcoVadis. So if you are submitting to EcoVadis, upfront, figuring out how you can best leverage your report and strategically develop it to maximize your scoring impacts for EcoVadis or any other assessments that you're undertaking. So one example here is you can consider using sustainability reporting standards, so things like the Global Reporting Initiative or the Sustainable Accounting Standards Board, GRI and SASB. Those can get you additional credit on assessments like EcoVadis, as well as report assurance. So if you do get third-party assurance of your report, those also can get you additional credit. So figuring out those details up front can be really helpful for strategically planning for your assessments. Regulatory compliance is also an application that these reports can be used for. So one in particular that some of you on this call may be very familiar with as the first deadline is approaching is California Senate Bill 261, which requires climate-related reporting. It will be requiring companies within scope to publicly report their climate risk on their website January 1st, 2026, and then it's an every other year requirement for reporting. So while this year that January 1st deadline is coming up quickly, because it will be every other year, thinking about longer term, 2 years from now, you may want to integrate your climate risk reporting into your sustainability report, and then you can use that report as your climate risk reporting for regulatory compliance. One other use case for reports that I wanted to raise that we often see with our clients is support for different raters and rankers. The common ones we tend to see are ISS and MSCI, but there's plenty of more, and there's plenty that are industry specific. So for these, we would highly recommend, taking a look at what you will be rated and ranked on, and similar to, preparing if you're going to be using your report as EcoVadis evidence. Preparing your report up front, making an outline and sketching out kind of what you can strategically place where in the report to help you achieve the outcomes that you're looking for on those raters and rankers. You can head to the next slide, Preston. Thanks. So another kind of nice activity to do up front that tends to be a bit of a easy lift. So it's nice. It gives you a satisfaction of checking something off your list, but is so crucial for making sure that that you and everyone else on your team is on the same page about the details of the report. So these details can include if you have completed a materiality or double materiality assessment, making sure those material topics are still relevant and applicable. Material topics often are the foundation of a report. Also ensuring you're clear on what is the reporting period. Typically these reports are annual, which could mean reporting with the calendar year, could also be aligned with your fiscal year and financial reporting. Determining if you will be applying any reporting standards or frameworks. So some common ones we see are Global Reporting Initiative, Sustainable Accounting Standards Board, the Task Force on Climate-Related Financial Disclosures, TCFD, which has now been absorbed by the IFRS Foundation, and now there's the IFRS S1 and S2 standards as well. So really nailing down which standards and frameworks will you be applying, because that will of course drive what data you need to collect and what content will go into the report. it's always best practice to have a point of contact for any questions or comments about the report. So confirming what email address, individual's name or phone number, however you want that point of contact to be communicated, but who will be that point of contact. As much as possible, getting leadership looped in to have their buy-in and approval for the report process and planning. As much as you can do that early helps pave the way for a smooth report cycle. And then third-party assurance, determining if you're planning to have your report undergo a third-party assurance. That will require an audit, so making sure you have that plan in place up front so you can build that into your timeline. Which goes, I believe, into the next slide. Sketching out a timeline. So reports can be a lengthy process. So of course, identifying any firm due dates of when certain milestones need to be completed, and if there's a hard due date for when you need to have it published, whether that be for a specific assessment that you need your report for, or a regulation, or a board meeting, or whatever it might be. Really mapping out the different steps of the reporting process and giving yourself some incremental deadlines to work towards so that you can, as much as possible, stick to that final deadline and have your report published on time. Then the last piece of the making a plan here, getting a report outline or skeleton draft in place. So if you know your material topics, those are a great place to start for what kind of sections you might expect to see in your report. And then determining who may need to be engaged to then round out the content and collect data for those respective sections. And critically, letting those people know, or those teams know, as soon as possible, the expectation for what you might need from them and when you might need it by. So whether it's data collection or reviews of the report content, the earlier you can let everyone know, the better, and the more likely that things will get done on time. It's a lot of moving parts and kind of cooks in the kitchen when it comes to reporting. So keeping everyone on the same page is, always recommended. We did also want to make sure that we raised that 3R Sustainability does have a partner sustainability assurance services that provides tailor-made sustainability assurance services for organizations' unique needs. So, Megan talked about greenhouse gas inventories. I talked about reporting. Our partner SAS can verify your greenhouse gas inventory or assure your sustainability report and more. So as you're making plans for these, if assurance is part of that planning, please keep SAS in mind and don't hesitate to reach out to us if you do have questions about the assurance process or want to discuss it further. Assurance is incredibly valuable for boosting the credibility of your reporting and your emissions. And as I noted on an earlier slide, because of the credibility it provides, it also tends to lead to higher scoring and additional credit on third-party benchmark assessments. I think I'll be handing it back over to Megan now.
Yeah, so Rachel and I have both talked a little bit about this work you can do, and it's all been in the lens of what 3R would recommend, but we want to specifically explain how we could help if you're looking for a partner. So 3R has multiple different greenhouse gas emission offerings that we can do. Each offering allows us to meet our clients where they're at, because everybody's in a different starting place. This could be your first year, this could be your 10th year, but we want to help all of our clients and potential clients achieve your goals for emission reporting. So we can calculate your inventory, scopes 1, 2, and 3, whatever kind of combination of that you're looking for. We can also do a readiness assessment, which is similar to the steps that we looked at. If you are not quite ready to calculate your inventory, or maybe you have your scope 1 and 2 inventory, but you're not really ready to dive into scope 3, we're able to do a readiness assessment for scope 3 and kind of help you get ready, especially if you're in scope for the California SB 253. You might have scope 1 and 2 ready for the regulations that will start in 2026, but scope 3 is not due to be reported until 2027. So maybe you're ready to kind of dive in and do this readiness this year so that the emissions are ready to be calculated and reported in 2027. And we can also do an assurance readiness assessment. So we can review your existing inventory, whether it be calculated by 3R or a different partner, and help you identify if you are ready for that assurance. So all of these services support the different, reasons you might have to calculate your inventory, such as customer requests through EcoVadis or CDP, supplier requests if you have to respond to Microsoft or Amazon, or if you've been required to set a science-based target, as well as your own internal, sustainability reporting needs, or as I mentioned, being ready for California's SB 253. So what 3R's emissions offering looks like, our inventory process, if you can go to the next slide, it's similar to what we talked about for that data readiness in terms of identifying the applicable sources. And then 3R would help you collect that data using customized checklists and data templates. And then 3R would be the ones to review the data for completeness and help identify the gaps and find the estimates and assumptions to use. We then calculate your emissions and create a greenhouse gas report that summarizes the findings. And we're also able to create inventory management plans to help you track the processes used for that inventory. And through our greenhouse gas report and our inventory management plan, we truly feel that this is going to get our clients to limited assurance. We help identify all the methodology, all the processes, assumptions, everything that is needed to get you to that limited assurance and help clients be ready to not just strengthen the confidence in their inventory, but be regulatory compliant, especially with those California laws. And now I think, Rachel, we'll talk about some of our sustainability reporting offers.
Yep. So just to talk a bit about how 3R can support with your sustainability reporting. So our team has ample experience and expertise in sustainability reporting. We can serve as a one-stop shop for all of our clients' reporting needs and really customize based on where our clients are at and what works for them. But we have our team of consultants that's well-versed in the latest and greatest of all of the different sustainability reporting standards. We also have professional design partners, so designers that can really bring your report to life and make it look beautiful. We have professional copy editors on our staff, and then of course our assurance partners at SAS as well. So really from everything from drafting, data collection, design, reviews, and assurance, we can really take you through that full process, start to finish of a report, or can just plug in where needed. Can you go to the next slide? Great, which this feeds right into our approach with reporting. So this is in general what the approach that we take, but really did want to emphasize that we do customize as needed, because we know every business is different in a different part of their journey on sustainability and sustainability reporting. That said, in general, we of course work upfront to set expectations so that we're all clear on the expectations for the report. And then we can provide tailored data collection tools based on the needs for the specific report, whether it's applying GRI, SASB, IFRS S1, S2, the ESRS, etc. And then as we get the data back and we can review against the different standards and frameworks to identify any gaps in areas for continual improvement. Can also help draft omission language for any data that is just unavailable or otherwise cannot be reported. From there, we go into report writing, so that includes report drafting and editing. We of course work closely with our clients to make sure that the right people internally at the client have their eyes on the report as well, so that we can take in that feedback and adjust the report appropriately. And then finally, from there, we send it off to design so that we can take the draft and align it with clients' branding guidelines and get it ready for publication. If a client is going through with assurance, we then also have AA1000 practitioners through SAS that can do that third-party assurance and provide you with the assurance statement after it goes through the audit. If you don't mind going to the next slide. We also want to make sure, of course, that the value of the report is maximized. So it doesn't just stop once the report is published, although we do, of course, celebrate the milestone that is getting the report published. But from publication, from there, we are able to work with our clients to engage stakeholders to make sure that the content of the report is being leveraged and actually makes its way to, if you think back to that initial slide on the report use cases and determining audiences, making sure that those audiences are actually seeing the content in the report. So we can support with social media posts or press releases, education campaigns, training sessions, and more to make sure that whoever the report was drafted for is in fact seeing that information and getting the value out of it. And with 3R in general, we always take a continual improvement approach to our work. So thinking at every step, how can we improve this for next year and continue to strengthen the report and the overall sustainability program. Which does, I think, lead us into our last slide here, which is really just about the 3R difference. And so, I'm extremely proud to work for 3R. And part of the reason I'm so proud to be an employee here is because of our approach to partnership. So we use our kind of deep expertise across the wide umbrella that is all things sustainability to meet our clients where they are at, help them get to where they want to go, and educate along the way. So I think with that, we have time now for questions from the audience.
Yeah, thank you both so much for going through all that. I think it's really helpful to just get everyone on the same page. We had some questions from the audience. One person said, is there any way we can make data collection a little less painful? We know we hear that all the time. Do you have any kind of high-level tips for supporting this person in their data collection?
I could start in the kind of lens of the greenhouse gas inventory. So something that we do is data collection sheets. That way we're making it clear, not just that we need data from you, but what the different inputs will be. So for instance, if we're trying to capture utility data, we would create a data checklist that would say we'd like the meter number, the date, the consumption, the unit. So that way we don't get kind of half completed data and then have to do a lot of back and forth to track down more details. So we find that an organized checklist that we can have consistent information reported through is a big helper.
For sure. And totally heard and will not act like data collection is not a challenge, because it is across every organization I've ever worked with. What I can say is we do our best at 3R to streamline data collection. So if you do have multiple different assessments, customer requests, report, trying to align where there are synergies on the data that is being asked for, so to make sure that we're not duplicating asks and leveraging, what was collected for EcoVadis, for example, to then apply to your report. Likewise with the greenhouse gas inventory, any synergies there we try and take advantage of to reduce the burden and double, triple asking. Traceability also becomes super important. So to the extent that data can be traced back to the source, so whether for a greenhouse gas inventory, if that's the actual utility bills, or if you have an HR platform and it's like people-related data, trying to keep that traceability clear, trying to note if data was changed, when it was changed, who changed it, etc. So we do have sheets, as Megan mentioned, to try and kind of get all of that in one place and consolidate the data together. But it is a constant evolution and improvement process to keep making the data collection easier and easier. The last thing I'll say on this too is For anyone who is embarking on an inaugural report or is making major changes to their report, the first year I would budget additional time for data collection. It's always a bigger lift the first time you do it, but the good news is as year over year, consistency really helps. So once you get it under your belt the first time, the second time, third time, and so on, tends to go more smoothly.
Thanks, Rachel. We have another question about first-time reporting. They said that they have done their greenhouse gas inventory in the past internally, but they're ready to report externally and do kind of a full sustainability report. I know you gave some tips about extra time for data collection. Any other tips, Rachel, you'd give, or Megan, for first-time public greenhouse gas reporting?
Well, it's super exciting. That's a great step in the process to have that transparency and take that information public. It also is, extremely useful for a lot of stakeholders to know that. So we'll start with there. That's very exciting. In terms of tips for first time reporting, definitely taking notes along the way of what works and what doesn't work, knowing that these reports are often going to be done on an annual cadence. So you're helping yourself for next year, the more that you can document things the first go around. I would say as well, um, with an inaugural report, it becomes, I think, really important. This is at the very end of the process, but to just think about how you're going to communicate once that report is out. So whether that's a press release, social media posts, as well as reporting internally, so an internal email blast, but really that stakeholder communications piece can be really critical to make sure that all the work that you're putting in on this first report doesn't go unnoticed, and that you can make sure you're getting the right eyes on the report once it's actually published. So would really put a lot of thought up front into the communications plan once the report is published.
I'd add when it comes to the actual greenhouse gas section of your report, to think about what your goal of this section is. Who are your stakeholders that are going to be seeing this, and what are you trying to communicate to them, beyond just putting the numbers in, trying to explain how you calculated these emissions at a high level, just to explain the authenticity of the numbers, as well as any other details that you think are going to add value to the report in terms of maybe an intensity metric or some greater detail around any specific emission source or category that is relevant to the industry that you're in, or the kind of goals of your report in general.
Thanks. Looks like we got a question in the chat about data transparency. Any suggestions about being transparent about real data? I'm going to guess that real at this point means actuals versus estimates. Any tips for person in the chat from either of you?
Sure. I see the note about GRI, the Global Reporting Initiative, too. So the Global Reporting Initiative does focus on companies reporting on their material topics, and has GRI 3-3, which is about reporting on the management approach for those topics. So one important note that sometimes gets lost, these different reporting standards don't always require quantitative disclosure. They also require discussion and analysis in the case of SASB, or more qualitative disclosure about governance processes, for example, or risk management, and things of that nature. So the more transparent that you can be, even if it's not on the quantitative data, if you're not at a point with confidence in the numbers, or for whatever other reason are not going to be publicly disclosing, we'll use greenhouse gas emissions as an example. So let's just say scope 1 and 2 inventory. If that's not approved to be or ready to be publicly reported, there's still plenty that you could report on in terms of your process for gathering your greenhouse gas data, being transparent about, if you're using like the greenhouse gas protocol, for example, to do it, where you're using maybe estimates, and just general disclosure about where you are in the journey. And your overall management approach for the emissions. So there's definitely qualitative narratives that still provide value if the quantitative data is not ready to be shared.
You get anything to add, or Rachel's got it covered?
Rachel, yeah, especially pointing out, yeah, not just you can, yeah, use qualitative responses, talk about the process, talk about any reduction efforts you might have. You don't have to publish a target or, exact plans, but just the general communication that this is something that you are working towards is still something you can include.
Awesome. Okay, I think we have one last question, unless anyone wants to pop in last minute. But how do the recent California climate laws impact our greenhouse gas reporting requirements?
Yes, great question. So, for those of you who might not know, or even those who just, can't get enough of it, the California climate laws, there are two. One is called California SB 261, which is related to reporting the disclosure of climate-related risks that are financially material, as well as climate-related opportunities. And then the other law is California SB 253, which is the requirement for the disclosure of greenhouse gas emissions. So for SB 253, Scope 1 and Scope 2 emissions are required to be disclosed in 2026 based on the previous year, so 2025 emissions, and they do need to have limited assurance. And then Scope 3 emissions are required to be reported in 2027 based on 2026 data, with no assurance needed at that time. And then by 2030, Scope 1 and Scope 2 emissions have to have reasonable assurance, which is a higher level of assurance. And Scope 3 needs to have limited assurance. So it's 2026, 2027, and 2030 are the big years to keep in mind for SB 253. And how 3R is approaching our handling of our client work with these laws is our inventories are assurance ready already. This is something we've been doing for years. Like I mentioned, our greenhouse gas report and our inventory management plan are the steps that we put into place so that our clients can gain assurance on those inventories. So we are working with our clients to continue that process. For those that maybe don't have an inventory management plan yet, we're adding that to their program. And then Scope 3, it's not due till 2027. So we're working with clients who maybe haven't calculated their inventory yet or want to move away from estimates and more towards actual data. So we are doing a lot of that readiness assessments for Scope 3, which is a deeper process to help you get ready to calculate or to help improve calculations. So those are kind of the two big influences that 3R is using to get ready for these California laws, as well as, keeping a close eye on all of CARB, the regulatory body that's responsible for these laws, all of their announcements to make sure that we have the strongest understanding of these laws as they are still finalizing some details in the next couple of months.
Thanks, Megan. And thank you everyone so much for coming today. We have our survey here on the screen. If you're checking your phone, take a moment, scan the QR code, give us some feedback. And if not, we'll send it over email as well, along with the recording. Yeah. Well, thank you so much everyone for joining. If you have any questions, our contact info is on the screen, and hope to see you soon.